Hello everyone and welcome to Day Trader S&P 500. Today is July 5th, 2021, Independence Day weekend for all of us here in America. Happy 4th or 5th of July to everyone. This is Dale Woodson, editor of Woodson Wave Report. Got some exciting things to announce. We have a new video on demand and a monthly contest and a special offer for YouTube subscribers. We'll get into all of that here shortly. First, I want to let you guys know about our honor roll and top 10 awards from Timer Digest as one of the top ranked market newsletters, and our disclaimer there. And then with our subscription services, we have a new video on demand. You can see a one-time $89 charge. You guys, I have Bitcoin loaded up there, GameStop analysis. If you subscribe, you can ask for two different stocks or whatever you want for the month. I've also loaded up the Classic Crashes report, which details the crashes from 1929 to 2008. And also have an educational video up there about trading a 3-wave retracement after a 5-wave advance. Also, we have we're launched today a YouTube 10% discount for any of our services. Enter the discount code YouTube. You get 10% off all of these, the annual, the monthly, video on demand, whatever you want. And not to be outdone is we have a new contest. Guess the closing price of the S&P at the end of July, and you could win a 30-day subscription. Clean up a little stuff there for all of our services. The annual subscription, you'll get 1 month or 30 days of those reports. You'll get the monthly subscription, which is daily reports for 30 days or a month, and you'll get the video on demand. That's a total of $466 free. I think I want to try to do this every month. We'll start with July. Guess the closing price of the S&P at the end of the month. The one that's closest gets all those things for free for a month. Okay, so you can see those. Let me get rid of this and get rid of this. And you can see those subscriptions down there. There's the monthly, the video on demand, and the monthly contest. You just got to put in your name and email address. Limit 1 guess per customer, or per. You can see our things here. We've got Bitcoin, we've got GameStop, we've got the Classic Crashes, and we've got the first educational or trading video, trading a 3-wave correction after a 5-wave move. Okay, I want to lead off today with Tesla because some interesting things developed on Friday or at the end of the week. And you can see this is the well, I don't have it in. Let me see if I got the bigger B. Yeah, the B wave high up here. After we had 5 waves down from January, we had 3 waves up for a B on April 14th, and then you can see another 5 waves down. Okay, let me just say right here, this could be C. This could be the end of it. It could be 5 down, 3 up, 5 down. We have to watch. There's at least 3 different Elliott wave possibilities here. Okay, and one is this is 5 down. Let's keep in the black. Then we've got an A up, a B down, and a C up. Okay, so that would be 5 down, 3 up, to be followed by 5 more down to our ultimate target at 418. That's one count. Okay, this price action, and I said this last week, this doesn't look impulsive to the downside. It really looks like a sideways 4. Okay, so let's look at in the red from this low here on, what was it, May 19th, May 18th. We have a 1 up in red, a 2 down, and then you can see 3 subdividing, 1 up, 2 down, 3, and then a 4th wave triangle, which I have marked here, A, B, C, D, E. Okay, we're expecting, if that is a correct count, then a thrust up higher for wave 5. Here's a thrust, but it's barely higher than 3. It's I think let me see, we got like 690 there, and here we have 700. Okay, so you would think, let me just put it here. Okay, let's see here. Let's get an extension. Okay, if this is 1, all right, and that's the end of 4, here where E would be right there, then you would think 5 would at least go, and I have it right here, that little 5 in red, to 722, where 5 would equal 1. It didn't. It doesn't mean it can't. And this could just be 1, 2, and then we get 3, 4, 5. Okay, but I started trading back in the 90s, and I always looked for wave 4s. They're easy to identify. They're long and sideways. This sure looks like a 4, doesn't it? And so we'd expect a 5. We would think in this count in the black that that C wave is complete and the entire correction from January is complete there. But we got to see this thrust up higher to show 5 ways up and a change in trend. So I want to let you guys know, be aware of that. We're going to have to watch this price action closely. Obviously, we have make or break points. We'd want to see a move up above 700 to 722 for wave 5, then a pullback. For the bullish case, and obviously we'd need a break of the April 14th high, which is 780, and then that would do it for all intents and purposes, meaning the C wave is complete here. Conversely, what's our make or break points? We like to take out this wave 1 high here, which is 625, because 4 cannot retrace more than 100% of 1, or can't go below. This 4 here cannot go below this 1 high here, okay? A move down there would negate that move up. So we're looking at the bearish count here. Then we would need a move below this May 19th low, which I think is 577, is it? Let me see. I'm sorry, 546. So that's another make or break point. 546 would give credence to the bearish count, okay? So that's what we're looking at. Let me see if I can get that whole, let me see if I can get into a daily bar and look at the bigger count here so you guys get a better picture of, there we go. There's the January high of 900. There's the A wave down. There's the B wave up, or it's A of B. Again, that's another count that I wanted to show you guys about. See the red circles, A, B, C? Okay, and then we've got a 1 and then a possible 2. Well, here is yet a third count, okay? Let's move that C. Whoops. Let me grab it here. That's the C. No, it's not. Come on, Dale. Too many working parts here. Let me see if I can grab that C. There we go. Okay, instead of that being A, B, C, this could be A here, B here, and then C here for 2. Okay, so that's another count. Obviously, we need a break of this high here of 780 for this count to be in effect. And I like this count the most because this would be A and then A, B, C, and that would put B over here. Okay, and that 0 has to go away. I can move that later. And then we would have a larger C wave down. So let me see, what is this retracement here on Tesla? Retracement, and we are looking at, get it there. Yeah, the 786 would be the next one at 822. And it hasn't even hit the 618. Well, A wave did just above it, which was 760. And the A wave hit right there at 780. So there's 3 different wave counts. We've given the make or break counts, make or break points or targets, if you will, for bullish and bearish. They are a little bit of ways away, but that's because Tesla's covered a lot of ground. Just think it went from 900 down into 539, which is a 40% haircut, and then a move back up to 780, and a move back down to almost a double bottom at 546, and here we are in between. Okay, so we'll have to watch this, see how this plays out. But this pattern right here, which caught my eye last week in here, this sure looks like a sideways 4. So we get a 5 up, then we call this 1, 2, 3, 4, 5. That 5 is not quite truncated, but it's just not enough to convince that it's gone the other way yet. So we'll watch that. Want to look at the S&P. Okay, S&P, we're looking at a daily bar. We've been looking for 5 waves up from the March 4 low. You can see here, we can mark them. And here we go with a 1 up, a 2 down, a 3 up, a 4 down, and a 5 up. And this is an ABC correction here. You can see this last one we could mark 1, 2, 3, 4, 5. 4 overlaps 1. The only way this could count correctly is if this is an ending diagonal triangle. Let me put that up there for you guys. On the S&P, okay, we would have a 1 there, a 2 there, a very short 3, a 4, and a 5. I don't know how this would count any better. Let me make that a little different color so it's easier to see, if that'll come into play there. Or we'll just leave it like that. But yeah, that doesn't look good, but we'll see where this goes. That's just a series of 1, 2, 1, 2, and then 3 up there, okay? But as far as time goes, we like what we see. Okay, let me get into that as far as the S&P with regards to time. Oh, again, we want to thank you guys. Remember to hit that like button. Let me see if I've got that here. Also, thank you guys for subscribing to the channel. We appreciate all the patronage, the reminder bell, and the like button, which didn't show, but we had a picture of it there. Thank you guys for all your patronage to the channel. Okay, let's look at the time spiral. We got 2 time spirals, one in black, one in red, one from the March 4 low, one from the May 5 high, and the market is turning on these time spirals. I want to point out both of these they're marking, well, they start off marking high, low, you know, high, low, but just like the one, if you guys remember, that lasted for 7 years from 1999 to 2006, after a certain amount of time, it starts marking consecutive highs. This one here was 4.7. I could have marked a high on 4.6. I could have easily put this here, and then it marks high, 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 okay? But either way, these have virtually zero slippage. We're looking at no slippage from 3.4 to 3.17, no slippage to 3.25, no slippage to 4.7, unless we're going to call a high 4.6 with a day. And then 4.29 had a minute slippage because it was pointing to 4.28. And this topped in the first minute of trading. It was followed by a decline. Okay, the next one was 6.1, followed by a decline. The next one in that sequence is July 26. From the May 5, we had a low, high, low with no slippage, no slippage. This one was on a Saturday, the 15th, so it topped when it could. The closest it could was Friday. Market doesn't trade on Saturday. Again, this one, there's no slippage on the 5.19. There was a low, well, slippage of 1 day, I'm sorry. And then we had the 6.1 high, the 6.15 high, and the next one was 7.1, and it looks like it's off, at least at this point, by 1 trading day. The most important point I want to make on these turn dates is you can see after this turn date, there's a decline. This is a daily bar, so you can see 1, 2, 3, 4, 5, 6 days of decline. After this one, 1, 2, 3 days. After this one, 1, 2, 3 days. After this one, 1, 2, 3 days. After this one, 1, 2, 3. After this one, 1, 2, 3. So the 7-1 was a turn date. At this time, it looks like it topped a day slippage plus 1 day. You can see right here. So we might expect at least 3 days of decline following this one. All the other ones have marked at least a 3-day decline, if not more. The next turn date in this sequence is 8-4. The next one over here again is July 26. I don't have it here, but the NASDAQ is also spinning on Fibonacci turn dates, and it is 7/27. So we may expect about 3 days of decline, maybe more, and then another high on July 26. We'll see how it plays out. Okay. All right, that's it for today. Have a happy holiday weekend. Trading begins tomorrow morning on Tuesday. And until next time, take care, everyone.